Benzinga market update. S&P futures down 5.50. The Dow futures down 190. Nasdaq down 3. Crude is down 19 cents at $68.74. Natural gas down 16 cents at $3.97. Gold up 11.50 at $29.30. Bitcoin futures now down 46.90 at 82,255. Coming up after the close at 4:01 p.m., earnings from CRM Salesforce. At 4:05, eBay. At 4:05, Urban Outfitters, URBN, SNOW Snowflake, PSTG Pure Storage, BYND Beyond Meat. And at 4:20 p.m. Eastern Time, NVDA will be reporting, expecting 84 cents in earnings, $38 billion in revenue for NVIDIA, coming up at 4:20 p.m. Eastern Time today.
It'll be the seminal event of our human existence. What's up, everyone? We'll be covering NVIDIA earnings live, including streaming the conference call and the price action. Should be pretty interesting. Most interested in how the market reacts to the continued bravado and bluster of none other than Jensen Huang, who I feel is kind of stepped very far into the territory of overselling where NVIDIA is, including saying things like they're defying the laws of physics and advertising Blackwell as something revolutionary when it ended up being more incremental. So it'll be interesting to see what they talk about with regards to some of the hiccups they've had with these AI chips, the Blackwell AI chips, as well as the same Blackwell chips that are put into the NVIDIA video cards. There's been a lot of issues with basically quality in this chips release cycle. And NVIDIA is expected to report 84 cents earnings per share, revenue of $38.26 billion. Coming into this release that is expected to come across the wires at about 4:20 p.m. Eastern. We'll let the live Squawk folks from Benzinga cover that as it comes through. And then we will have the conference call at 5 p.m. Eastern, live streamed with the price action as well. So stay tuned. Seeing a little bit of buyers absorbing sellers, some excitement here around that 131 level as we're making this push higher into the close. There's about 20 minutes left in the trading day. And let's just zoom out on the profile here. If you're tuned into my stream, you can see above we've got a lot of offers overhead, stacking up 133, 134, 135, 136. Hundreds of thousands of shares on offer at those higher levels. Let's pull it back even further here. Yeah, we've got the really big daddy offers overhead. My, oh my. Let me just take a moment to change a setting here so we can see where that outside liquidity is. So yeah, that's a delta of about 19 million between offers and bids, suggesting there is a huge amount of supply overhead on NVIDIA from 140 to 160 a share.
FMTO, Femto Technologies, popping here. Foxtrot Michael Tango Oscar. FMTO shares up about 12%.
All right, we'll zoom it back out just a little bit here. But I think we should watch these offers. You can see they're growing as we approach earnings. So there are folks suggesting here they're expecting higher prices and they want to sell into those higher prices. And we could see a bit of convergence here. We talked about 150 being a wall of calls. I posted the chart on Twitter. You can also see it on the Traderade Discord and the Bot Queries channel. That's the largest area of offer on the entire book.
MTTR, Matterport getting a pop here now. Michael Tango Romeo on volume. MTTR.
That's nearly 3 million shares on offer at 150. So that is a resistance level to watch if we get a pop.
MCW, Mr. Car Wash, share is getting a pop here on a spike in volume. Micro Charlie Whiskey.
You also see S&P 500 futures starting to pick up a little bit into the close here. We're just going to quickly shift over to that view. I'll go to the filtered view so we can get rid of some of the annoying market maker brackets. But you can see there are offers building up over S&P 500 futures as we push into the close here, closer to that options implied resistance level where there is some supply here around Gamma 7. And we can see there are more offers starting to stack overhead on S&P futures as we approach the close, just about 16 minutes away here. Yeah, we are seeing flows becoming just a bit more constructive on the option side of things too in SPX.
Absorption NQH 5 CME1 sellers at 21,200.
And sellers are trying to absorb buyers here on the NASDAQ, but I'm not so sure that's going to have that much of an effect. There was a pretty big offer overhead in NQ, about 204 contracts, and buyers just absorbed all of that. So sellers tried to kind of put a wall in overhead. So far, not having too much of an effect. There's some excitement ahead of NVIDIA earnings here. Let's get back to that chart. We're just going to zoom it out just a little bit more.
I'm just feeling celebration tonight. Celebrate, don't wait too late. No, we don't stop. You can't stop. We're gonna celebrate one more time. One more time. One more time. A celebration. You know we're gonna do it right tonight. Hey, just feel it. Music's got me feeling the need. Yeah.
See if we can squeeze some headlines in here.
All right, we're gonna celebrate one more time.
Pretty narrow, but we can probably get at least
celebrate and dance so free. Music's got me feeling so free. Celebrate and dance so free. One more time. Music's got me feeling so free. We're gonna celebrate and dance so free. One more time. Music's got me feeling so free. We're gonna celebrate and dance so free. One more time. Music's got me feeling so free. We're gonna celebrate and dance so free. One more time. Music's got me feeling so free. We're gonna celebrate and dance so free. One more time. Music's got me feeling so free. We're gonna celebrate and dance so free. One more time. Music's got me feeling so free. We're gonna celebrate and dance so free. One more time. Music's got me feeling so free. We're gonna celebrate and dance so free. One more time. Music's got me feeling so free. We're gonna celebrate and dance so free. One more time. Music's got me feeling so free. We're gonna celebrate. One more time. Music's got me feeling so free. We're gonna celebrate and dance so free. One more time. Music's got me feeling so free. We're gonna celebrate and dance so free. One more time. Music's got me feeling so free. We're gonna celebrate and dance so free. One more time. Music's got me feeling so free. We're gonna celebrate and dance so free.
LFST, Lifestance Health, March $8 calls trading. Lima Foxtrot, Sandy Tango, LFST.
Into the room dripping in gold. Dripping, dripping. I walked into the room dripping in gold. Dripping, dripping. It's true, I crave you.
Coming up, earnings from CRM Salesforce. Salesforce expecting $2.61 in earnings. That's coming up right after the close. Coming up at 4:05 p.m. EBAY eBay.
Let's just stop and think before
eBay expecting $1.20 adjusted on EBAY. Also, Urban Outfitters coming up at 4:05. SNOW Snowflake, PSTG Pure Storage, BYND Beyond Meat. NVDA coming up at 4:20 p.m. Eastern Time.
I walked into the room dripping in gold. I walked into the room dripping in gold. A wave of heads being tied, so I can talk. My heart broke when I saw you kept your gaze control. Oh, I cannot
Semaphore reporting that Trump is expected to sign another Doge-related order today.
I crave you.
20 seconds to the market close.
Exhaustion in NQH5 CME1 by buyers at 21,201.5. Exhaustion in NQH5 CME1 by buyers at 21,228.5. Exhaustion in ESH5 CME by buyers at 5,976.75.
PARA Paramount Global reporting. Papa Alpha Romeo Alpha. KTOS Kratos reporting. Kratos reporting 3 cents. The estimate was 11 cents, or a correction, 4 cents, so that's a penny short. Salesforce reporting right now, CRM Salesforce reporting $2.78, Charlie Romeo Michael. The estimate was $2.61, so that's a beat for CRM. Revenue of $9.99 billion. The estimate was $10.03 billion for Charlie Romeo Michael. CRM. Paramount Global reporting a loss of 11 cents. The estimate was 12 cents in earnings, so that's a miss. Revenue 7.89 billion, misses the 8.09 billion estimate for PARA, Paramount Global. Salesforce sees full year adjusted earnings of $11.09 to $11.17, and Q1 earnings of $2.53 to $2.55. Salesforce shares are selling off here now, sharply 277 now, down about $30 on Salesforce CRM. SBGI Sinclair reporting $2.61. The estimate was $1.90, so that's a beat for Sandy Bravo Golf India. Letter A, Agilent. Agilent reporting $1.11. The estimate on letter A was $1.14, so that's short on the gap number for letter A. eBay reported $1.25. The estimate was $1.20. That's a beat for eBay. Revenue of $2.6 billion. The estimate was $2.57 billion for Echo Bravo Alpha Yankee. That's a beat for eBay. eBay shares are falling here to the low 68.74. Sees Q1 revenue of $2.52 to $2.56 billion. That's Echo Bravo Alpha Yankee. PSTG, Pure Storage reporting revenue of $879 million. PSTG, the estimate was $868 million. That's a beat on revenue for Papa Sandy Tango Golf, PSTG. GEF, Grief reporting adjusted earnings of 39 cents. The estimate was 73 cents for Golf Echo Foxtrot. SNPS synopsis reporting $3.03. The estimate $2.84. That's Sandy November Papa Sandy. SNPS BYND Beyond Meat reported a loss of 65 cents. The estimate was a loss of 45 cents, so that's wider loss than expected for Bravo Yankee November Delta BYND. SRPT Sarepta. Sarepta reported $1.50. $1.50 on Sarepta. The estimate was $1.90, so that's a miss. For SRPT, SNW Snowflake, a loss of 99 cents. That is in line with estimate. Revenue of $986 million. The estimate $955 million. So that's a beat on revenue. Earnings coming in line for Sandy November Oscar Whiskey. Snowflake shares very volatile here, falling to a low of $153, now at $181. Up about $15 on SNOW, Sandy November Oscar Whiskey. URBN Urban Outfitters reporting $1.28. The estimate was 96 cents, so that's a beat for URBN. Sales of 1.63 million, the estimate 1.64 million, 1.63 billion, the estimate 1.64 billion. So that's a miss on revenue, a beat on earnings for URBN. Uniform Romeo Bravo November. RRGB Red Robin Gourmet Burgers reported a loss of $2.48. That is a bigger loss than the 58 cents that was expected for RRGB. Romeo Golf Bravo. Mir Group reporting 99 cents. The estimate was 70 cents for MYRG. So that's a beat for Mir Group. Michael Yankee Romeo Golf. Beyond Meat announcing suspension of operations in China. Company reducing their workforce. CPOP. Pop Culture with a filing. Closing the acquisition of Shaman Hand-in-Hand Network Technology. That's Charlie Papa, Oscar Papa, CPOP. Shares of Snowflake continuing higher now, $188.25, up about $22 now at the highs on SNOW. CDNA, CareDX. CareDX FDX reporting 18 cents. The estimate was 13 cents, so that's a beat on the adjusted numbers. 86.6 million in revenue. The estimate was 84.1 million, so that's a beat for CDNA. Coming up in about 7 minutes, earnings from NVIDIA, NVDA. PKG Packaging Corp naming new CFO, Papa Kilo Golf. CPRX Catalyst Pharma reporting 44 cents. Charlie Papa Romeo X-ray. The estimate was 33 cents, so that's a beat for CPRX. Joby reporting their results. Joby Joby reports record certification progress and delivery of second aircraft to U.S. Air Force at Edwards Air Force Base. That's JOBY. Company ended the Q4 of 2024 $933 million in cash. That's Juliet Oscar Bravo Yankee, JOBY. Joby share is hitting $7.43 at the high of 73 cents, JOBY. Coming up in 5 minutes, less than 5 minutes now, NVIDIA. EPR Properties reporting adjusted FFO of $1.22. The estimate was $1.22, so that's in line for Echo Papa Romeo. MORN Morningstar $2.14. The estimate $2.06. That's a beat for Michael Oscar Romeo November. MORN. RSI, Rush Street Interactive, reporting revenue of $254.1 million. The estimate $245.5 million for Romeo Sandy, India. RSI. MARA, Marathon Digital, said during Q4 mined 2,492 Bitcoin and purchased 15,574. That's MARA. UHS Universal Health reporting $4.96. The Universal Health, the estimate was $4.17, so that's a beat for UHS. Revenue of $4.11 billion. The estimate was $4.01 billion, so that's a beat for Uniform Hotel Sandy, UHS.
Less than 3 minutes left until the most important event in our human existence. NVIDIA earnings. We either all die or transcend into the singularity. It's going to be amazing, I promise.
Picks up the rice in the church where the wedding has been. Lives in a dream, waits by the window, wearing the face that she keeps in.
We're going to zoom out the price levels just a little bit more here. 2 minutes.
KW Kennedy Wilson reporting 24 cents. The estimate was a loss of 51 cents per kilo whiskey.
Donning his socks in the night when there's nobody there. Why does he care? All the lonely people. Where do they all come from? All the lonely people. Where do they all belong? Ah, look at all the lonely people. Ah, look at all the lonely people. Eleanor Rigby died in the church and was buried along with her name. Nobody came. Father Mackenzie wiping the dirt from his hands as he walks from the grave. No one was saved.
Coming up in less than a minute now, NVIDIA. NVIDIA expecting 84 cents in earnings, 38.04 billion in revenue.
Here we go.
NVIDIA reporting 89 cents adjusted. The estimate was 84 cents. That's a beat. NVIDIA shares are dipping here now. A revenue of 39.3 billion. Which
Absorption
is,
and QH5
also a
CME1
beat
buyers
for
at
NVIDIA.
21,103.75.
Said automotive revenue up 103%. Data center revenue up 93%. Gaming revenue down 11%. Shares reversing sharply now and spiking here on NVIDIA. NVDA, again, NVIDIA beating on earnings and on revenue. Shares right now near the highs at 135.72, up about $4.50 on NVIDIA. NVIDIA said outlook of Q1 GAAP and non-GAAP gross margins are expected to be 70.6% and 71% respectively, plus or minus 50 basis points. Q1 revenue seen at $43 billion for NVIDIA. NVIDIA shares continuing higher now. That's NVDA NVIDIA right now off the highs at $135. NVIDIA shares once again reversing and moving lower. Right now, NVIDIA shares are at 129.70, 875, pulling back here now. November Victor Delta Alpha, 125. NVIDIA share is now trading just about flat, continuing to have big volatility here following their report. NVDA. S&P futures moving, also volatile here along with NVIDIA.
My 2 cents, this is going to be all about guidance and addressing some of the more difficult questions about the Blackwell release, which was, for the gaming side of things, easily NVIDIA's worst release ever. Incremental performance gains marred by bugs, including overheating, render units not working properly, which has everything to do with just production follies and letting that pushed to the end consumers. Not a great look. And then some allegations of cables melting on the 5090s like we saw on the 4090s as well. On the data center side, some issues with Blackwell overheating, which was supposed to be addressed in manufacturing, but still the production units having the same problems. Margin compression is a continuing theme at NVIDIA. Remember, their margins used to be in the mid to high 80s. Now they're guiding for the low 70s, as low as 71%. That is a concern, that continuation of margin compression. The more technical glitches they have, the more margin compression we can expect. I think that's one reason the market's a little shaky here, because of the guidance, the 71% margin guidance. It just suggests continued compression here. We do have the call coming up at 5 p.m. Eastern. And guidance has come out to some degree, right? We've seen some of the guidance, but it's going to be more about what do they say in the call. So let me clarify. The guidance for NVIDIA for their next quarter, they have shared that, but there's also a different type of guidance.
Shares
it's really
eBay,
how the management
now
talks it up.
$64.39, down about $5 following their report. Echo Bravo Alpha Yankee. Salesforce right now off the highs at 200, off the lows at 291.25, down about $16 on Salesforce. Charlie Romeo Michael.
So while this company did present a double beat and a reasonably strong guide in terms of sales, the margin compression theme is something we're going to hear about from analysts tonight. Mark my words, during the Q&A, they're going to ask for more clarity about where this is going and whether that path of margins is continuing to move lower and lower.
LSF, Laird Superfood, reporting a loss of 4 cents. The estimate was a loss of 4 cents, so that's in line for Lima Sandy Foxtrot.
And stay tuned, folks. We will be carrying the conference call at 5 p.m. Eastern coming up in just about 23 minutes. Let's see if we can pull in one more layer of headlines.
APA reported 79 cents adjusted. The estimate was 97 cents. That's Alpha Papa Alpha, APA. AI, C3 AI, reported a loss of 12 cents adjusted. That's better than the 25-cent loss that was expected. Sales coming in just ahead of estimate at 98.78 million for Alpha India.
NVIDIA says they delivered 11 billion of Blackwell architecture revenue in Q4. So that would indicate that about over a quarter of their revenue in their Q4 was from Blackwell. So that transition is still ongoing, which is another concern about that margin mix, right? Blackwell is a lower margin product. So as we go into the subsequent quarters and that revenue mix becomes more and more Blackwell centric, we do have to wonder whether margin compression continues, right? Are we going to get to the mid 60s next? Remember during the prior call, management was talking about mid 70s. Now they're guiding to low 70s. So there's a sort of stair step lower in NVIDIA margins.
CPOP $1.35 now. At the highs, Charlie Papa, Oscar Papa. MQ Marquetta. Marquetta reported loss of 5 cents in line. Michael Quebec. Shares popped on that. $4.10 up 61 cents. That's Michael Quebec MQ. NIXX, Nixie, more highs now, $2.25. November India X-ray, X-ray. SDGR Schrodinger reported 88.3 million, the estimate 83.2 million in revenue. Sandy Delta Golf Romeo. GAIN, Gladstone Investment, announcing acquisition of Unique Pyrotechnic, that's Golf Alpha India, November.
And if we're looking at that adjusted gross margin, we are already seeing it guided lower. So the prior estimates were really looking for this quarter to be around 75-76%. It came in at 73%. Now analysts had marked it down to 73.5% already, but now management sees gross margins dropping to 70.5% to 71.5% versus an estimate of 72%. So again, that stair stepping down is something to be somewhat concerned about. We'll hear more color about that, I imagine, in the analyst Q&A in the second half of the earnings call. And that call is coming up here not too long from now, just about 26 and a half minutes. 5 p.m. Eastern. Still have a lot of supply overhead on NVIDIA shares at 150 levels, 713,000 on offer, 145, 544,000 on offer, and 140, 258,000 on offer. There's really nowhere near that much demand below. The delta between offers and bids, 5.5 million, with 3 million on bid and 8.5 million on offer. So again, lots of supply overhead here to absorb buyers.
I hear the songs from the places where I was born. Upon that hill across the blue lake, that's where I had my first heartbreak. I still remember how it all changed. My father said,
NVIDIA shares pulling back again, 129.11, down about $2. NVDA.
Just hugging that point of control. We're going to zoom out a little bit on the time scale here. Let's see, let's take it out to 30 minutes. See a little bit more of the price action after hours.
there was a time I met a girl of a different kind. We ruled the world. I thought I'd never lose her out of sight. We were so young. I think of her now and then. I still hear the songs reminding me of a friend. Upon a hill across the blue lake, that's where I have my first.
Root ROOT reported $1.62. The estimate was a loss of 44 cents. Sales of 326 million. The estimate was 290 million. That's ROOT.
Don't you worry, child. She has got a plan for you. Don't you worry now. Yeah. She has got a plan for you.
City's breaking down on a camel's back. They just have to go 'cause they don't know where. So all your favorite streets is appealing to see. You won't get undercounting 'cause you're not that free. You got a new horizon, it's ephemeral style. A melancholy town where we never smile. And all I wanna hear is the message beep. My dreams, they gotta kissing 'cause I don't get sleep, no. Windmill, windmill for the land, the forever hand in hand. Take it all, live on your stride. It is taking, falling down. Love forever, love is free. Let's turn forever, you and me. Windmill, windmill for the land. Is everybody in?
Laughing gas, these hazmats, fast cats, lining them up like ass crack. Ladies, ponies at the track, it's my chocolate attack. Shit, I'm stepping in harder this year. Yeah, bear repping in harder this year. Watch me as I gravitate. Ha 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 ha. Yo, we gon' ghost town, this Motown with your sound. You in the blink, gon' bite the dust, can't fight with us. With your sound, you kill the ink, so don't stop, get it, until you chat it, head and watch the way I navigate. Ha 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 ha.
KDP, Keurig Dr. Pepper, announcing secondary offering of common stock. That 73 million shares. That's KDP.
Windmill, windmill for the land, the forever hand in hand. Take it all, live on your stride. It is taking, falling down. Love forever, love is free. Let's turn forever, you and me.
much to me. Just take my hand and hold me tight. You'll never buy my love. You buy me this and you buy me that. So bring over, bring me over. You got me wrong and that's a fact. Something that you got to know is, will you see that way down low? That I dance to a different love. Will you realize when I'm gone that I dance to a different song? It's a shame that I got to go.
We're going to cut over to the conference call here, which is going to be starting in just about 12 and a half minutes. So you will hear NVIDIA's less ideal hold music. And that call should last about an hour, starting off the management presentation and then the Q&A section.
SGLY Singularity naming a new CFO, Charlie Golf Lima Yankee. Correction, Sandy Golf Lima Yankee.
Good afternoon. My name is Krista, and I will be your conference operator today. At this time, I would like to welcome everyone to NVIDIA's fourth quarter earnings call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during this time, simply press star followed by the number 1 on your telephone keypad. And if you'd like to withdraw your question, again, press star 1. Thank you. Stuart Stecker, you may begin your conference.
Thank you. Good afternoon, everyone, and welcome to NVIDIA's conference call for the fourth quarter of fiscal 2025. With me today from NVIDIA are Jensen Huang, President and Chief Executive Officer, and Colette Kress, Executive Vice President and Chief Financial Officer. I'd like to remind you that our call is being webcast live on NVIDIA's Investor Relations website. The webcast will be available for replay until the conference call to discuss our financial results for the first quarter of fiscal 2026. The content of today's call is NVIDIA's property. It can't be reproduced or transcribed without prior written consent. During this call, we may make forward-looking statements based on current expectations. These are subject to a number of significant risks and uncertainties, and our actual results may differ materially. For discussion of factors that could affect our future financial results and business, please refer to the disclosure in today's earnings release, our most recent Forms 10-K and 10-Q, and the reports that we may file on Form 8-K with the Securities and Exchange Commission. All our statements are made as of today, February 26, 2025, based on information currently available to us. Except as required by law, we assume no obligation to update any such statements. During this call, we will discuss non-GAAP financial measures. You can find a reconciliation of these non-GAAP financial measures to GAAP financial measures in our CFO commentary, which is posted on our website. With that, let me turn the call over to Colette.
Thanks, Stuart. Q4 was another record quarter. Revenue of $39.3 billion was up 12% sequentially and up 78% year on year, and above our outlook of $37.5 billion. For fiscal 2025, revenue was $130.5 billion, up 114% from the prior year. Let's start with data center. Data center revenue for fiscal 2025 was $115.2 billion, more than doubling from the prior year. In the fourth quarter, data center revenue of $35.6 billion was a record, up 16% sequentially and 93% year on year, as the Blackwell ramp commenced and Hopper 200 continued sequential growth. In Q4, Blackwell sales exceeded our expectations. We delivered $11 billion of Blackwell revenue to meet strong demand. This is the fastest product ramp in our company's history, unprecedented in its speed and scale. Blackwell production is in full gear across multiple configurations, and we are increasing supply quickly to meet expanding customer adoption. Our Q4 data center compute revenue jumped 18% sequentially and over 2x year on year. Customers are racing to scale infrastructure to train the next generation of cutting-edge models and unlock the next level of AI capabilities. With Blackwell, it will be common for these clusters to start with 100,000 GPUs or more. Shipments have already started for multiple infrastructures of this size. Post-training and model customization are fueling demand for NVIDIA infrastructure and software as developers and enterprises leverage techniques such as fine-tuning, reinforcement learning, and distillation to tailor models for domain-specific use cases. Hugging Face alone hosts over 90,000 derivatives created from the Llama Foundation model. The scale of post-training and model customization is massive and can collectively demand orders of magnitude more compute than pre-training. Our inference demand is accelerating, driven by test time scaling and new reasoning models like OpenAI's O3 DeepSeek R1, and Grok 3. Long-thinking reasoning AI can require 100x more compute per task compared to one-shot inferences. Blackwell was architected for reasoning AI inference. Blackwell supercharges reasoning AI models with up to 25x higher token throughput and 20x lower cost versus Hopper 100. It is revolutionary. Transformer Engine is built for LLM and mixture of experts inference. And its NVLink domain delivers 14x the throughput of PCIe Gen 5, ensuring the response time, throughput, and cost efficiency needed to tackle the growing complexity of inference at scale. Companies across industries are tapping into NVIDIA's full stack inference platform to boost performance and slash costs. Snap tripled inference throughput and cut costs by 66% using NVIDIA TensorRT for its screenshot feature. Perplexity sees 435 million monthly queries and reduced its inference costs 3x with NVIDIA Triton Inference Server and TensorRT LLM. Microsoft Bing achieved a 5x speedup and major TCO savings for visual search across billions of images with NVIDIA TensorRT and acceleration libraries. Blackwell has great demand for inference. Many of the early GB200 deployments are earmarked for inference, a first for a new architecture. Blackwell addresses the entire AI market from pre-training, post-training to inference across clouds to on-premise to enterprise. CUDA's programmable architecture accelerates every AI model and over 4,400 applications, ensuring large infrastructure investments against obsolescence in rapidly evolving market. Our performance and pace of innovation is unmatched. We're driven to a 200x reduction in inference costs in just the last 2 years. We deliver the lowest TCO and the highest ROI. And full stack optimizations for NVIDIA and our large ecosystem, including 5.9 million developers, continuously improve our customers' economics. In Q4, large CSPs represented about half of our data center revenue, and these sales increased nearly 2x year on year. Large CSPs were some of the first to stand up Blackwell, with Azure, GCP, AWS, and OCI bringing GB200 systems to cloud regions around the world to meet surging customer demand for AI. Regional clouds hosting NVIDIA GPUs increased as a percentage of data center revenue, reflecting continued AI factory buildouts globally and rapidly rising demand for AI reasoning models and agents. We've launched a 100,000 GB200 cluster-based instance with NVLink Switch and Quantum 2 InfiniBand. Consumer internet revenue grew 3x year on year, driven by an expanding set of generative AI and deep learning use cases. These include recommender systems, vision language understanding, synthetic data generation search, and agentic AI. For example, xAI is adopting the GB200 to train and inference its next generation of Grok AI models. Meta's cutting-edge Andromeda advertising engine runs on NVIDIA's Grace Hopper superchip, serving vast quantities of ads across Instagram, Facebook applications. Andromeda harnesses Grace Hopper's fast interconnect and large memory to boost inference throughput by 3x, enhance ad personalization, and deliver meaningful jumps in monetization and ROI. Enterprise revenue increased nearly 2x year on accelerating demand for model fine-tuning, RAG, and agentic AI workflows, and GPU accelerated data processing. We introduced NVIDIA Llama Nematron model family NIMs to help developers create and deploy AI agents across a range of applications, including customer support, fraud detection, and product supply chain and inventory management. Leading AI agent platform providers, including SAP and ServiceNow, are among the first to use new models. Healthcare leaders IQVIA, Illumina, and Mayo Clinic, as well as ARC Institute, are using NVIDIA AI to speed drug discovery, enhance genomic research, and pioneer advanced healthcare services with generative and agentic AI. As AI expands beyond the digital world, NVIDIA infrastructure and software platforms are increasingly being adopted to power robotics and physical AI development. One of the early and largest robotics applications in autonomous vehicles, where virtually every AV company is developing on NVIDIA in the data center, the car, or both. NVIDIA's automotive vertical revenue is expected to grow to approximately $5 billion this fiscal year. At CES, Hyundai Motor Group announced it is adopting NVIDIA technologies to accelerate AV and robotics development and smart factory initiatives. Vision transformers, self-supervised learning, multimodal sensor fusion, and high-fidelity simulation are driving breakthroughs in AV development and will require 10x more compute. At CEX, we announced the NVIDIA Cosmo World Foundation Model Platform. Just as language foundation models have revolutionized language AI, Cosmos is a physical AI to revolutionize robotics. Leading robotics and automotive companies, including ride-sharing giant Uber, are among the first to adopt the platform. From a geographic perspective, sequential growth in our data center revenue was strongest in the U.S., driven by the initial ramp of Blackwell. Countries across the globe are building their AI ecosystems, and demand for compute infrastructure is surging. France's €200 billion AI investment and the EU's €200 billion Invest AI initiative offer a glimpse into the build-out to set redefined global AI infrastructure in the coming years. Now, as a percentage of total data center revenue, data center sales in China remained well below levels seen on the onset of export controls. Absent any change in regulations, we believe that China's shipments will remain roughly at the current percentage. The market in China for data center solutions remains very competitive. We will continue to comply with export controls while serving our customers. Networking revenue declined 3% sequentially. Our networking attached to GPU compute systems is robust at over 75%. We are transitioning from small NVLink 8 with InfiniBand to large NVLink 72 with Spectrum X. Spectrum X and NVLink switch revenue increased and represents a major new growth sector. We expect networking to return to growth in Q1. AI requires a new class of networking. NVIDIA offers NVLink switch systems for HPC supercomputers and Spectrum X for Ethernet environments. Spectrum X enhances the Ethernet for AI computing and has been a huge success. Microsoft Azure, OCI, CoreWeave, and others are building large AI factories with Spectrum X. The first Stargate data centers will use Spectrum X. Yesterday, Cisco announced integrating Spectrum X into their networking portfolio to help enterprises build AI infrastructure. With its large enterprise footprint and global reach, Cisco will bring NVIDIA Ethernet to every industry. Now moving to gaming and AI PCs. Gaming revenue of $2.5 billion decreased 22% sequentially and 11% year-on-year. Full-year revenue of $11.4 billion increased 9% year-on-year. and demand remained strong throughout the holiday. However, Q4 shipments were impacted by supply constraints. We expect strong sequential growth in Q1 as supply increases. The new GeForce RTX 50 series desktop and laptop GPUs are here. Built for gamers, creators, and developers, they fuse AI and graphics, redefining visual computing. Powered by the Blackwell architecture, 5th generation Tensor cores, and 4th generation RT cores, and featuring up to 3,400 AI TOPS. These GPUs deliver a 2x performance leap and new AI-driven rendering, including neural shaders, digital human technologies, geometry, and lighting. The new DLSS 4 boosts frame rates up to 8x with AI-driven frame generation, turning one rendered frame into 3. It also features the industry's first real-time application of transformer models, packing 2x more parameters and 4x the compute for unprecedented visual fidelity. We also announced a wave of GeForce Blackwell laptop GPUs with new NVIDIA Max-Q technology that extends battery life by up to an incredible 40%. These laptops will be available starting in March from the world's top manufacturers. Moving to our professional visualization business. Revenue of $511 million was up 5% sequentially and 10% year-on-year. 21% year-on-year. Key industry verticals driving demand include automotive and healthcare. NVIDIA technologies and generative AI are reshaping design, engineering, and simulation workloads. Increasingly, these technologies, Cadence and Siemens, fueling demand for NVIDIA RTX workstations. Now moving to automotive. Revenue was a record $570 million, up 27% sequentially and up 103% year-on-year. Full year revenue of $1.7 billion increased 55% year-on-year. Strong growth was driven by the continued ramp in autonomous vehicles, including cars and robotaxis. At CES, we announced Toyota, the world's largest automaker, will build its next generation vehicles on NVIDIA Orin, running the safety-certified NVIDIA Drive OS. We announced Aurora and Continental will deploy driverless trucks at scale powered by NVIDIA Drive 4. Finally, our end-to-end autonomous vehicle platform, NVIDIA Drive Hyperion, has passed industry safety assessments by Husud and Ryland safety and cybersecurity. NVIDIA is the first AV platform to receive a comprehensive set of third-party assessments. Okay, moving to the rest of the P&L. GAAP gross margins was 73%, and non-GAAP gross margins was 73.5%, down sequentially as expected with our first deliveries of the Blackwell architecture. As discussed last quarter, Blackwell is a customizable AI infrastructure with several different types of NVIDIA build chips, multiple networking options, and for air and liquid-cooled data center. We exceeded our expectations in Q4 in ramping Blackwell, increasing system availability, providing several configurations to our customers. As Blackwell ramps, we expect gross margins to be in the low 70s. We are focused on expediting the manufacturing of Blackwell systems to meet strong customer demand as they race to build out Blackwell infrastructure. The cost and gross margin will improve and return to the mid-70s late this fiscal year. Sequentially, GAAP operating expenses were up 9% and non-GAAP operating expenses were 11%, reflecting higher engineering development costs and higher compute and infrastructure costs for new product introductions. In Q4, we returned $8.1 billion to shareholders, in the form of share repurchases and cash dividends. Let me turn to the outlook in the first quarter. Total revenue is expected to be $43 billion, plus or minus 2%. Continuing with its strong demand, we expect a significant ramp of Blackwell in Q1. We expect sequential growth in both data center and gaming. Within data center, we expect sequential growth from both compute and networking. GAAP and non-GAAP gross margins are expected to be 70.6% and 71%, respectively, plus or minus 50 basis points. GAAP and non-GAAP operating expenses are expected to be approximately $5.2 billion and $3.6 billion, respectively. We expect full year, fiscal year 26 operating expenses to be in the mid-30s. GAAP and non-GAAP other incoming expenses are expected to be an income of approximately $400 million, excluding gains and losses from non-marketable and publicly held equity securities. GAAP and non-GAAP tax rates are expected to be 17% plus or minus 1%, excluding any discrete items. Further financial details are included in the CFO commentary and other information available on our IR website, including a new financial information AI agent. In closing, let me highlight upcoming events for the financial community. We will be at the TD Cowen Healthcare Conference in Boston on March 3rd, and at the Morgan Stanley Technology, Media, and Telecom Conference in San Francisco on March 5th. Please join us for our annual GTC conference starting Monday, March 17th in San Jose, California. Jensen will deliver a news-packed keynote on March 18th, and we will host a Q&A session for our financial analysts the next day, March 19th. We look forward to seeing you at these events. Our earnings call to discuss the results for our first quarter of fiscal 2026 is scheduled for May 28th, 2025. We are going to open up the call, operator, to questions. If you could start that, that would be great.
Thank you. At this time, I would like to remind everyone, in order to ask a question, please press star, then the number 1 on your telephone keypad. I also ask that you please limit yourself to one question. For any additional questions, please re-queue. And your first question comes from CJ Muse with Cantor Fitzgerald. Please go ahead.
Yeah, good afternoon. Thank you for taking the question. I guess for me, Jensen, as test-time compute and reinforcement learning show such promise, we're clearly seeing an increasing blurring of the lines between training and inference. What does this mean for the potential future of potentially inference-dedicated clusters? And how do you think about the overall impact to NVIDIA and your customers? Thank you.
Yeah, I appreciate that, CJ. There are now multiple scaling laws. There's the pre-training scaling law, and that's going to continue to scale because we have multimodality. We have data that came from reasoning that are now used to do pre-training. And then the second is post-training scaling law, using reinforcement learning human feedback, reinforcement learning AI feedback, reinforcement learning verifiable rewards. The amount of computation you use for post-training is actually higher than pre-training. And it's kind of sensible in the sense that you could, while you're using reinforcement learning, generate an enormous amount of synthetic data or synthetically generated tokens. AI models are basically generating tokens to train AI models. And that's post-training. And the third part, this is the part that you mentioned, is test-time compute or reasoning, long thinking, inference scaling. They're all basically the same ideas. And there you have chain of thought, you have search. The amount of tokens generated, the amount of inference compute needed is already 100 times more than the one-shot examples and the one-shot capabilities of large language models in the beginning, and that's just the beginning. This is just the beginning. The idea that the next generation could have thousands times and even hopefully extremely thoughtful and simulation-based and search-based models that could be hundreds of thousands, millions of times more compute than today is in our future. And so the question is, how do you design such an architecture? Some of the models are auto-regressive. Some of the models the times you want your data center to have disaggregated inference. Sometimes it's compacted, and so it's hard to figure out what is the best configuration of a data center, which is the reason why NVIDIA's architecture is so popular. We run every model. We are great at training. The vast majority of our compute today is actually inference, and Blackwell takes all of that to a new level. We designed Blackwell with the idea of reasoning models in mind. And when you look at training, it's many times more performant. But what's really amazing is for long thinking, test time scaling, reasoning AI models were tens of times faster, 25 times higher throughput. And so Blackwell is going to be incredible across the board. And when you have a data center that allows you to configure and use your data center based on, are you doing more pre-training now, post-training now, or scaling out your inference, our architecture is fungible and easy to use in all of those different ways. And so we're seeing, in fact, much, much more concentration of a unified architecture than ever before.
Your next question comes from the line of Joe Moore with JP Morgan. Please go ahead.
Morgan Stanley, actually, thank you. I wonder if you could talk about GB200 at CES. You sort of talked about the complexity of the rack level systems and the challenges you have. And then, as you said in the prepared remarks, we've seen a lot of general availability. Where are you in terms of that ramp? Are there still bottlenecks to consider at a systems level above and beyond the chip level? And just, have you maintained your enthusiasm for the NVL72 platforms?
Well, I'm more enthusiastic today than I was at CES. And the reason for that is because we've shipped a lot more since CES. We have some 350 plants manufacturing the 1.5 million components that go into each one of the Blackwell racks, Grace Blackwell racks. Yes, it's extremely complicated, and we successfully and incredibly ramped up Grace Blackwell, delivering some $11 billion in revenues last quarter. We're going to have to continue to scale as demand is quite high and customers are anxious and impatient to get their Blackwell systems. You've probably seen on the web a fair number of celebrations about Grace Blackwell systems coming online, and our own engineering and our own design teams and software teams. CoreWeave has now been quite public about the successful bring up of theirs. Microsoft has, of course, OpenAI has, and you're starting to see many come online. And so I think the answer to your question is nothing is easy about what we're doing, but we're doing great, and all of our partners are doing great.
Your next question comes from the line of Vivek Arya with Bank of America Securities. Please go ahead.
Thank you for taking my question. Colette, if you wouldn't mind confirming if Q1 is the bottom for gross margins. And then, Jensen, my question is for you. What is on your dashboard to give you the confidence that the strong demand can sustain into next year? And has DeepSeek and whatever innovations they came up with, has that changed that view in any way? Thank you.
Let me first take the first part of the question there regarding the gross margin. During our Blackwell ramp, our gross margins will be in the low 70s. At this point, we are focusing on expediting our manufacturing to make sure that we can provide to customers as soon as possible. Our Blackwell has fully ramped, and once our Blackwell fully ramps, we can improve our cost and our gross margin. So we expect to probably be in the mid-70s later this year. Walking through what you heard Jensen speak about the systems and their complexity. They are customizable in some cases. They've got multiple networking options. They have liquid cooled and water cooled. So we know there is an opportunity for us to improve these gross margins going forward. But right now, we are going to focus on getting the manufacturing complete and to our customers as soon as possible.
We know several of the amount of capital investment that data centers are building out towards. We know that going forward, the vast majority of software is going to be based on machine learning. And so accelerated computing and generative AI, reasoning AI, are going to be the type of architecture you want in your data center. We have, of course, forecasts and plans from our top partners. And we also know that there are many innovative, really exciting startups that are still coming online as new opportunities for developing the next breakthroughs in AI, whether it's agentic AIs, reasoning AIs, or physical AIs. The number of startups are still quite vibrant, and each one of them need a fair amount of computing infrastructure. And so I think whether it's the near-term signals or the midterm signals, near-term signals, of course, are POs and forecasts and things like that. Midterm signals would be the level of infrastructure and CapEx scale out compared to previous years. And then the long-term signals has to do with the fact that we know fundamentally software has changed from hand coding that runs on CPUs to machine learning and AI-based software that runs on GPUs and accelerated computing systems. And so we have a fairly good sense that this is the future of software. And then maybe as you roll it out, another way to think about that is we've really only tapped consumer AI and search and some amount of consumer generative AI, advertising, recommenders, kind of the early days of software. The next wave's coming. Agentic AI for enterprise, physical AI for robotics, and sovereign AI as different regions build out their AI for their own ecosystems. And so each one of these are barely off the ground, and we can see them. We can see them because, obviously we're in the center of much of this development, and we can see great activity happening in all these different places, and these will happen. So near term, midterm, long term.
Your next question comes from the line of Harlan Sur with JP Morgan. Please go ahead.
Blackwell Ultra set to launch in the second half of this year, in line with the team's annual product cadence. Jensen, can you help us understand the demand dynamics for Ultra, given that you'll still be ramping the current generation Blackwell solutions? How do your customers and the supply chain also manage the simultaneous ramps of these two products? And is the team still on track to execute Blackwell Ultra in the second half of this year?
Yes. Blackwell Ultra is second half. As you know, the first Blackwell was, we had a hiccup that probably cost us a couple of months. were fully recovered, of course. The team did an amazing job recovering, and all of our supply chain partners and just so many people helped us recover at the speed of light. And so now we've successfully ramped production of Blackwell. But that doesn't stop the next train. The next train is on an annual rhythm, and Blackwell Ultra with new networking, new memories, and of course new processors, and all of that is coming online. We've been working with all of our partners and customers, laying this out. They have all of the necessary information, and we'll work with everybody to do the proper transition. This time between Blackwell and Blackwell Ultra, the system architecture is exactly the same. It's a lot harder going from Hopper to Blackwell because we went from an NVLink 8 system to a NVLink 72 base system. So the chassis, the architecture of the system, the hardware, the power delivery, all of that had to change. This was quite a challenging transition, but the next transition will slot right in. Blackwell Ultra will slot right in. We've also already revealed and been working very closely with all of our partners on the click after that. And the click after that is called Vera Rubin. And all of our partners are getting up to speed on the transition of that. And so preparing for that transition. And again, we're going to provide a big, huge step up. And so come to GTC, and I'll talk to you about Blackwell Ultra, Vera Rubin, and then show you what's the one click after that. Really, really exciting new product. So come to GTC, please.
Your next question comes from the line of Timothy Arcuri with UBS. Please go ahead.
Thanks a lot. Jensen, we hear a lot about custom ASICs. Can you kind of speak to the balance between custom ASIC and merchant GPU? We hear about some of these heterogeneous superclusters to use both GPU and ASIC. Is that something customers are planning on building, or will these infrastructures remain fairly distinct? Thanks.
Well, we build very different things than ASICs. In some ways, completely different. In some areas, we intersect. We're different in several ways. One, NVIDIA's architecture is general. Whether you've optimized for autoregressive models or diffusion-based models or vision-based models or multimodal models or text models, we're great at all of it. We're great at all of it because our software stack is our architecture is flexible, our software stack ecosystem is so rich that we're the initial target of most exciting innovations in algorithms. And so by definition, we're much more general than narrow. We're also really good from the end to end, from data processing, the curation of the training data, to the training of the data, of course, to reinforcement learning used in post-training, all the way to inference with test time scaling. So we're general, we're end to end, and we're everywhere. And because we're not in just one cloud, we're in every cloud. We could be on-prem, we could be in a and a great initial target for anybody who's starting up a new company. And so we're everywhere. And then the third thing I would say is that our performance and our rhythm is so incredibly fast. Remember that these data centers are always fixed in size. They're fixed in size or they're fixed in power. And if our performance per watt is anywhere from, it translates directly to revenues. And so if you have a 100 megawatt data center, if the performance or the throughput in that 100 megawatt or that gigawatt data center is 4 times or 8 times higher, your revenues for that. The reason that is so different than data centers of the past is because AI factories are directly monetizable through its tokens generated. And so the token throughput of our architecture being so incredibly fast that are building these things for revenue generation reasons and capturing the fast ROIs. And so I think the third reason is performance. And then the last thing that I would say is the software is no different than what we do. We have to build a new architecture, and the ecosystem that sits on top of our architecture is, and that's fairly obvious because the amount of software that the world is building on top of our architecture is growing exponentially, and AI is advancing very quickly. So bringing that whole ecosystem on top of multiple chips is hard. And so I would just because the chip is designed doesn't mean it gets deployed. And you've seen this, over and over again. There are a lot of chips that gets built, but when the time comes, a business decision has to be made. And that business decision processor into a limited AI factory in size, in power, and in time. And our technology is not only more advanced, more performant software capability, and very importantly, our ability to deploy is lightning fast. And so these things are not for the faint of heart, as everybody knows now. And so there's a lot of different reasons why we do well.
Question comes from the line of Ben Reitz with Melius Research. Please go ahead.
Yeah, hi, Ben Reitz is here. Hey, thanks a lot for the question. Hey, Jensen, it's a geography-related question. You did a great job explaining some of the demand underlying, factors here on the strength. But U.S. was up about $5 billion or so sequentially, and I think there is a concern about whether U.S. can pick up the slack if there's as we go throughout the year. If this kind of surge in the U.S. continues and it's gonna be whether that's okay, and if that underlies your growth rate, how can you keep growing so fast with this mix shift towards the U.S.? Your guidance looks like China is probably up sequentially, so just wondering if you.
China is approximately the same percentage as Q4 and as previous quarters. It's about half of what it was before the export. With respect to geographies, the takeaway is that AI is software. It's modern software. It's incredible modern software, but it's modern software. And AI has gone services everywhere, shopping services everywhere. And if you were to buy, a quart of milk is delivered to you, AI was involved. And so almost everything that a consumer service provides, every student will use AI as a tutor. Healthcare services use AI. Financial services use AI. No fintech company will not use AI. Every fintech company will. Uses AI. The number of every higher education, every university uses AI, and so stream that it's being integrated into every application, and our hope is that of course the technology continues to advance safely and advance in a where I do believe that we're at the beginning of this new transition. And what I mean by that in the beginning is remember, behind us has been decades been built for a world of hand coding and general purpose computing and CPUs and so on and so forth. The world is going to be, almost all software will be infused with AI. All software and all services will be ultimately based on machine learning, and the data flywheel is going to be part of improving software and services, and that the future computers will be, we're really at 2 years into that journey, and in modernizing computers that have taken decades to build out. And so I'm fairly sure that we're in the beginning of this new era. And then lastly, a larger part of the world's GDP than AI. No software tool ever has. And so this is now a software tool that can address a much larger part of the world's GDP, more than any time in history. Think about whether something is big or small. It has to be in the context of that. And when you take a step back and look at it from that perspective, we're really just in the beginnings.
Your next question comes from the line of Aaron. Aaron, your line is open. Your next question comes from Mark Lupasis with Evercore ISI. Please go ahead.
Hi, that's Mark Lupasis. Thanks for taking the question. I had a clarification and a question. Colette, for the clarification, did you say that enterprise within the data center grew 2x year on year for the January quarter? And if so, does that for you, the question, hyperscalers are the biggest purchasers of your solutions, but they buy equipment for both internal and external workloads, external workloads being cloud services that enterprises use. So the question is, can you give us a sense in that external workload and internal, and as these new AI workloads and applications come up, would you expect enterprises to become a larger part of that consumption mix? And does that impact how you?
Sure. Thanks for the question regarding our enterprise business. Yes, it grew 2x, and very similar to what we were seeing with our large CSPs. Keep in mind, these are both important areas to understand. Models can be working on inference in their own work, but keep in mind that is also where the enterprises are surfacing. Your enterprises are both with your CSPs as well as in terms of building on their own. They're both correct, growing quite well.
Half of our business, and the CSPs have internal consumption and external consumption, as you say. And we're of course, used for internal consumption. We work very closely with all of them to optimize workloads that are internal to them because they have a large infrastructure of NVDA gear that they could take for AI on the one hand, video processing on the other hand, data processing like Spark. We're fungible, and so the useful life of our infrastructure is much better. If the useful life is much longer, then the TCO is also lower. And the second part is, how do we see the growth of enterprise, or not CSPs, if you will, going forward? And the answer is, I believe long term, it is by far larger. And the reason for that is because and what is not served by the computer industry is largely industrial. So let me give you an example. when we say enterprise, and let's use a car company as an example because they make both soft things and hard things. And so in the case of a car company, the employees would be what we call enterprise. And agentic AI and software planning systems and tools, and we have some really exciting things to share with you guys at GTC. Those agentic systems are for employees, to make employees more productive, to design, to market, to plan, to operate their company. That's agentic AIs. On the other hand, the cars that they manufacture also need AI. They need an AI system that trains the cars, treats this entire giant fleet of cars. And, today, there's 1 billion cars on the road. Someday, there'll be 1 billion cars on the road, and every single one of those cars will be, robotic cars. And they'll all be collecting data, and we'll be improving the car factory today. In the future, they'll have a car factory and an AI factory. And then inside the car itself is a robotic system. And so, as you can see, there are 3 computers involved. And there's the computer that helps the people. There's the computer that builds the AI for the machineries. It could be, of course, it could be a tractor. It could be a lawnmower. It could be a humanoid robot that's being developed today. It could be a building. It could be a warehouse. These physical systems require a new type of AI we call physical AI. They can't just understand the meaning of words and languages, but they have to understand the meaning of the world. Friction and inertia, object permanence and cause and effect, and all of those type of things that are common sense to you and I, but AIs have to go learn those physical effects. So we call that physical AI. That whole part of using agentic AI to revolutionize the way we work inside companies, that's just starting. This is now the beginning of the agentic AI era, and you hear a lot of people talking about it, and we've got some really great things going on. And then there's the physical AI after that, and then there are robotic systems after that. And so these 3 computers are all brand new, and my sense is that long-term, this will be by far the larger of them all, which kind of makes sense. The world's GDP is represented by either heavy industries or industrials and companies that are providing for those.
Your next question comes from the line of Aaron Rakers with Wells Fargo. Please go ahead.
Yeah, thanks for letting me back in. Jensen, I'm curious, as we now approach the 2-year anniversary of really the Hopper inflection that you saw in 2023 in Gen AI in general, and we think about the roadmap you have in front of us, how do you think about the infrastructure that's been deployed from a replacement cycle perspective, and whether, if it's GB300 or if it's the Rubin cycle where we start to see maybe some refresh opportunity? I'm just curious of how you look at that.
I appreciate it. First of all, people are still using volts and pascals and amperes. And the reason for that is because there are always things that, because CUDA is so programmable, you could use it right. Well, one of the major use cases right now is data processing and data curation. You find a circumstance that an AI model is not very good at. You present that circumstance to a vision language model. Let's say it's a car. You present that circumstance to a vision language model. The vision language model actually looks at the circumstance and said, "This is what happened, and I wasn't very good at it." You then take that response, the prompt, and you go and prompt an AI model to go find in your whole lake of data other circumstances like that, whatever that circumstance was. And then you use an AI to do domain randomization and generate a whole bunch of other examples. And then from that, you can go train the model. And so you could use the amperes to go and do data processing and data curation and machine learning based search. And then you create the training data set, which you then present to your Hopper systems for training. And so each one of these these architectures are completely, they're all CUDA compatible, and so everything runs on everything. But if you have infrastructure in place, then you can put the less intensive workloads onto the install base of the past. All of our GPUs are very well employed.
We have time for one more question, and that question comes from Atif Malik with Citi. Please go ahead.
Hi, thank you for taking my question. I have a follow-up question on gross margins for Colette. Colette, I understand there are many moving parts, Blackwell yields, NVLink 72, and Ethernet mix. And you kind of tiptoed the earlier question if April quarter is the bottom. But second half would have to ramp like 200 basis points per quarter to get to the mid-70s range that you're giving for the end of the fiscal year. And we still don't know much about tariffs impact to broader semiconductors. So what kind of gives you the confidence in that trajectory in the back half this year?
Yeah, thanks for the question. Our gross margins, they're quite complex in terms of the material and everything that we put together in a Blackwell system. Tremendous amount of opportunity to look at a lot of different pieces of that on how we can better improve our gross margins over time. Remember, we have many different configurations as well on Blackwell that will be able to help us do that. So together, working after we get some of these really strong ramping completed for our customers, we can begin a lot of that work. If not, we're going to probably start as soon as possible if we can. And if we can improve it in the short term, we will also do that. Tariffs, at this point, it's a little bit of an unknown. It's an unknown until we understand further what the U.S. government's plan is, both its timing, its where, and how much. So at this time, we are awaiting. But again, we would, of course, always follow export controls and/or tariffs in that manner.
Ladies and gentlemen, that does conclude our question and answer session. I'm sorry.
Thank you. No.
And we're going to open up
I
to Jensen, and I
wanted to
believe
thank
he has
you.
a couple things.
I just wanted to thank you. Thank you, Colette. The demand for Blackwell is extraordinary. AI is evolving beyond perception and generative AI into reasoning. With reasoning AI, we're observing another scaling law, inference time or test time scaling. The more computation, the more the model thinks, the smarter the answer. Models like OpenAI's Grok 3, DeepSeek R1 are reasoning models that apply inference time scaling. Reasoning models can consume 100 times more compute. Future reasoning models can consume much more compute. DeepSeek R1 has ignited global enthusiasm. It's an excellent innovation, but even more importantly, it has open sourced a world-class reasoning AI model. Nearly every AI developer is applying R1 or chain of thought and reinforcement learning techniques like R1 to scale their model's performance. We now have 3 scaling laws, as I mentioned earlier, driving the demand for AI computing. The traditional scaling laws of AI remains intact. Foundation models are being enhanced with multimodality, and pre-training is still growing. But it's no longer enough. We have 2 additional scaling dimensions. Post-training scaling, where reinforcement learning, fine-tuning, model distillation require orders of magnitude more compute than pre-training alone. Inference time scaling and reasoning, where a single query can demand 100 times more compute. We designed Blackwell for this moment, a single platform that can easily transition from pre-training, post-training, and test time scaling. Blackwell's FP4 transformer engine and NVLink 72 scale-up fabric and new software technologies let Blackwell process reasoning AI models 25 times faster than Hopper. Blackwell in all of its configurations is in full production. Each Grace Blackwell NVLink 72 rack is an engineering marvel. 1.5 million components produced across 350 manufacturing sites by nearly 100,000 factory operators. AI is advancing at light speed. We're at the beginning of reasoning AI and inference time scaling. But we're just at the start of the age of AI. Multimodal AIs, enterprise AI, sovereign AI, and physical AI are right around the corner. We will grow strongly in 2025. Going forward, data centers will dedicate most of CapEx to accelerated computing and AI. Data centers will increasingly become AI factories, and every company will have them, either rented or self-operated. I want to thank all of you for joining us today. Come join us at GTC in a couple of weeks. We're going to be talking about Blackwell Ultra, Rubin, and other new computing, networking, reasoning AI, physical AI products, and a whole bunch more. Thank you.
Folks, that
This
was
concludes
the
today's
NVIDIA earnings call, and they are wrapping up the call right now. I thought it was an interesting call overall, but the one thing that I didn't really get a lot of clarity of that I was hoping to get more clarity on was margins. You know, we did hear some vagaries about how they plan to try to improve them, maybe back up to the mid 70s. But we also heard that last quarter, and we got what, 73.5 and guidance for 71.5, and then saying maybe back to the mid 70s later this year. I just would be a little bit concerned about that component of it. I'm not saying NVIDIA cannot expand their margins. I'm just saying that that's probably the biggest pain point to watch. Next to that is the changes that have happened in both training and inference, right? If we really think about this and break it down, there's less demand for training as time goes on, and a lot of the larger models have been trained, and some of the mid-size and smaller models are sort of taking pieces off of that in various ways. That's sort of what DeepSeek R1 did, and that's one of the reasons it wasn't an incredibly resource-intensive model to train. But the other part of both training and inference that we should probably appreciate is that it's becoming more efficient on the software side. It actually involves a lot less GPU cycles to get to reasonably strong token per second rates. And that's because you have K and V caching, you have advancements that are happening in speculative decoding, you have flash attention, and other areas of innovation that have made the AI software stack incredibly performant, even on a self-hosted large language model like a 32 billion parameter model that I can run on my own computer, right? I can still get 15 to 20 tokens per second without speculative decoding. And you add that in, you can get anywhere between 30 and 60. Now, the reason I mention that is because there was a comment during the call talking about how Blackwell was built specifically for reasoning models and that it can provide as much as 25-fold increase in token generation rates on those same models. I am a little bit skeptical about that. And the reason is I'm not sure if this is a, sort of orange to orange comparison. It feels like on the one hand, they're looking at Hopper and saying, okay, let's not put any of these updated software modifications in that have happened over time, the K and V caching, flash attention, speculative decoding, etc. And let's run that just raw hardware. And then let's look at the Blackwell chip and put all of our optimizations in that and then show that incredible increase. Even then, though, it's still a bit far-fetched to believe it's a 25-fold increase, or that Blackwell was actually built with the idea of reasoning models, which at the time of the design of Blackwell, reasoning models were barely even in the imagination of a lot of the AI researchers. So it's hard for me to imagine a model that didn't yet exist where what its GPU compute requirements would actually be would be the inspiration for designing components of Blackwell. Basically saying something that was sort of the glimmer in an engineer's eye somehow inspired this new hardware line, having not yet existed or been spec'd out. I'm a little bit skeptical about that and some of the benchmark stuff, and with good reason, by the way. One of the reasons I say that is because the Blackwell release itself has in many ways been more incremental in performance gains, particularly on the gaming side of things. We've seen a lot of misrepresentation on benchmarks and a lot of talk about how it's supposed to be a revolutionary video card, and it ended up being the most bungled launch with problems of overheating, problems with the rendering units not being there at the specs from the manufacturer, basically saying there was more defective parts that had to be disabled at manufacturing, and these units were shipped out nevertheless. And then on the data center side and on the gaming side, problems with overheating. So that's not to say that NVIDIA isn't able to correct these issues. I believe they can, and they likely will, but we are seeing on this yearly cadence of new GPU releases that they're starting to run into more engineering problems and also making less gains in terms of the overall performance that these new chips provide. So that would be another concern in addition to the margin compression is as these processors become more complex and we have more issues with phenomenon like quantum tunneling, where essentially if you're going down from 4, 3, 2 nanometer scale, you start to have electrons essentially not really following the laws of physics as we understand them at these very small scales. And that creates more needs for error correction and other workarounds. So that's something else to consider as we get to that Rubin series of GPUs and others in the future is really how are we going to get that same rate of improvement for products where we're starting to actually challenge some of the laws of physics. And I know Jensen famously said that NVIDIA is sort of defying the laws of physics. I would just say the reality is that it's the opposite is true. The laws of physics are challenging the cadence of NVIDIA's chip cycles having the same amount of performance gains that they had prior. That's one of the things to take into consideration, and on the gaming side, it's somewhat less of an issue because it's such a smaller segment of their revenue. And yet on the data center side, it's a pretty big deal because one of the biggest impetus for buying the latest generation of these GPUs is getting those performance gains that allows you to cram more compute into the same square footage of data center. Eventually, that law of diminishing returns does start to come in. The other thing I would pay attention to over the quarters to come are silicon that are specifically designed for AI tasks. Amazon is making a chip called Trainium that's specifically made for training AIs. That is something where I expect we'll see other companies, getting those types of chips to production. And if you look at using a GPU for training and inference, as time goes on, I'm sure NVIDIA will specialize them more and more. But on the other side of it, it is right now like throwing a sledgehammer at a tack. It's more efficient to have chips that are specialized for the tasks that they're engaging in. So I think we will see more competition on the hardware side with specialized chips. And already Amazon, forgive their terrible naming convention with Trainium, it's the least imaginative name for a chip I think I've ever heard. But on the other side of it, I do think that they have a chance there and other companies in those fields making chips for training and inference as well to absorb some of that market share where NVIDIA has 95% of data center market share. So for them, it's really about the turnover rate of their ability to produce more chips because they already have consumed the vast majority of market share. So it's not about growing that total addressable market, which is growing on its own, but they've absorbed most of it. It's more about encouraging that refresh cycle from their customers, right? Every 1, 2, or 3 years, replacing a fair amount of their data center hardware. So that's another thing to take into consideration. Software efficiency is ramping up across the stack, even on my self-hosted AI system, which is, nothing extraordinary, but it's still able to do a lot of pretty cool stuff on a workstation, a high-end computer. And a lot of that has to do with the software improvements that have happened. And then moving along the line down to where you start to see some of those improvements on the hardware side, right? Specialized silicon and otherwise. And then the third risk, and these are all things I discussed on a video that we released from Traderade in July of 2024, the third rail of risk is regulatory risk that we could see from the EU or otherwise, particularly now that we're seeing tariff tensions and other trade tensions ramping up. The EU has been investigating NVIDIA for anti-competitive and monopoly business practices for quite some time. It is growing more likely that they might take one of those actions like they've taken with Apple, Microsoft, Google, and others, where they basically open up an ecology that's meant to be proprietary in a closed ecosystem. right? For example, these app store markets where now you have to have European phones sideloaded with competitors' app markets, or at least have that optionality. With Microsoft Teams getting unbundled from Microsoft 365, things like that could also lead to the EU saying, you know what, you need to open up CUDA to your competitors or otherwise allow them to build middleware without, threatening to sue them. So I do think that we are in a year where the innovation cycle for AI, machine learning, a lot of these other components is going to ramp up. But I also believe we're going to see more competition, and that's good. Because when NVIDIA sees margin compression, the other part of it could be from more competition. Other companies making chips that allows people to run the same workloads at a lower cost would help them to bring prices down for their customers, right? Those costs could come down in a more competitive environment. That is to say, if they didn't have 95% of market share, if other companies were coming in and were effectively more competitive in the space, that would bring down the cost for startups all the way to the Fortune 500 investing in AI, because a lot of what NVIDIA charges is simply just margin. So you're buying a $30, $40, $50,000, component for a rack for your AI system. That is what marked up 3-4 fold from what it costs them to make it, even more than that in some cases. That's what I'm talking about. Those big margins are unusual for semiconductors too. They don't tend to last over time. Semiconductors tend to be more cyclical. And while this has been an incredible cycle, I do think we're closer to the peak of it for NVIDIA than maybe we are for some of the other semiconductors, many of whom have been languishing. So let's take that all the sort of hype and showmanship from the NVIDIA call, where management didn't feel particularly enthusiastic about a lot of this stuff, and maybe take it with a bit of a grain of salt. Because it does feel like some of the energy has come out of the room. NVIDIA has been in a consolidating range sideways for quite a long time. We didn't see much of a reaction to this earnings call either. Like typically there would be a pretty big aftermarket reaction to these calls. With NVIDIA, right now, the stock is down 1/3%. So vol crush tomorrow for both sides of the options chain is something to reasonably expect. Both calls and puts can go down in value. Why do I mention that? Because I see a lot of folks, self-proclaimed traders, betting big on earnings. And the thing that they may not factor in is that there's a ramp up of vol into these vol catalysts to factor for the potential move, which means the next day, particularly if you don't get that move, and even if you do, but to a lesser extent, there's vol crush. What that means is erosion of premium, particularly on whatever side of the chain is on the wrong side, but on both sides of the options chain, or puts and calls. So just think about all that, contextualize it, and be careful out there if you're trying to play these things with large size on short dated calls or puts, because earnings are not only a casino, it's largely a binary event as to what happens, but the vol crush can absolutely destroy you even if you're right. If you don't know what volatility crush is, read about it. Appreciate everyone tuning in. I think this was a lot of fun. And as we have other large events to cover, like the Fed, like other earnings and otherwise, I'll certainly be back live. I'm also live every Tuesday at 9 a.m. talking about order flow. So thanks everyone for tuning in. Appreciate you all. Have a great night. Rest of your week. I'll catch you soon.